good afternoon, or good evening. It is December the 1st, 4:05 p.m. over there on the East Coast. It is 5 a.m., December 2nd over here where I am, and I am ready for these next couple of weeks that we have as we head into the end of the year. But first off, I want to thank you. Yes, I rarely ever take time off, but I do take off during Thanksgiving, and I was able to once again spend an amazing couple of days down there with the Tulloy Foundation. Pogi Lazatin introduced me to a few years ago. Absolutely incredible, all the work that was being done there, although the foreigner presence that has been in Angeles, Pampanga, Subic for decades is starting to dwindle down as there are just new groups of people that are coming in. But it was actually very, very nice because Pogi here, as you can see, Pogi in the white hair, donning the nice Tim Richards stomach. Jaime Marcos was in town to celebrate the inauguration of the new Pampang market, and having done quite a bit of business when I was a business partner with her sister, it was very nice to be able to catch up. So, yeah, it was an amazing weekend. It's good to be back. It was a long drive, but we are here, and we are back, and we are heading into December. So let's start off with, where are we? Well, last week, like I said, I'll go back over here on the email going into last week, the preferred view. And once again, being offline, I appreciate that. Friday half session, only once in recent years was it volatile, back in 2021. And it started to look that way as we went into the early part of the week. Fridays love to be less than 10-point closes. That as well did not work out. But anyway, the preferred view heading into the week, into the end of this week, into the start of December, was that we were due to get a dip. Due to get a dip down, break down below that 59.50, 59.45 retest, head down into the lower 5900 zone, maybe even break down below 5900s, and then start off December, boom. Again, with the new moon. So I had a couple of trade calls out there for you going into the weekend. And again, VIX reclaiming 1542 and pushing to 1622 supports these. Down there, right below it, VIX failing 1451 is a deal breaker, and SPX 5986 is likely to appear. So you guys all have the email, you all went through it, and after the email went out was when the news came out that Scott Bessent is going to be Trump's Treasury Secretary. And the market just went apeshit on Sunday night. Where did we jap up? 59.69.34 is where we closed on the Friday. We gapped up 30 points over here at 59.92, 28 to 23 points. Never, ever, ever even attempted to bust out. Filled the gap pretty quickly. That was the first major deal breaker that the bullish view was off the table. Then you come into Tuesday, and Tuesday they said, you know what, man, it's not actually off the table. New highs, 60.25.42. Wednesday was when you started to look a little shaky there, as you actually not only had a rare red close, having not had many of them whatsoever. Got your red close there on Thursday, down there below 6,000, and then all of a sudden they decided to say, let's go and make that 60.39 that Tim started talking about at the beginning of the month effective. Got your 60.39 there on Friday and your nice little dip into the end of the day. Very, very shallow week, very, very slow week, and very minimal week. 80-point range, 40 points to the upside. 2 green closes in a row as far as the week goes. Ended the month up there, 347 points, up 5% for the month. So what does it tell us? Well, kind of tells us a lot, but very few people will be willing to listen because that's the way the game works. Look over onto the QQQ, red week, finished down, well, call it flat for the week. Had a minus 1.5% day there on Thursday. Things were looking a little shaky. All of that ended there on Friday. On your half session as well, And you come over here onto the IWM, and the IWM starting to look like, oh my God, this is breakout, this is breakout, this is breakout. But again, IWM finished up 0.38 points for the week. Did a nothing burger week as you ended the month to make sure that you gained that 10% for the month of November, all of which came after the Donald Trump election win. So again, you look through your green closes and you see that getting a red close is very rare, but you wound up getting one. You got one to break that monotony there on Tuesday. And again, getting nothing but plus ones, plus 2%. No minus 1% day yet over on the IWM. But over on the SPX, well, I'll get to this in a minute. We are starting to tread into some pretty big warning waters, how we are now going in with 16 sessions without a plus 1% day. We haven't had a plus 1% day since Donald Trump won. That was the last time we had a plus 1% day over there on the SPX. We've had a minus 1% day, sure. We've had a couple of big dips there, sure. But we haven't had a plus 1% session still. And because we have climbed, just go ahead and make our adjustments there. We're talking about 60, 92, 70, which, I don't know, man. That just, it doesn't fit into any projection anywhere whatsoever, but that would be your plus 1% day for Monday. So, again, IWM, nothing much. QQQ, the weak link, nothing much. SPX, got through your Thanksgiving. Now we're heading into December. And that's what we're here to look at. So let me bring you in just with a rough drawing of what you've got coming to you for the next 3 weeks. Your full moon. Today's your full moon. Today's your full moon. And as we do with our moons, we do a +3, -3. Full moon having come last 3 sessions of last week, Tuesday, Wednesday, Friday. And now you have your 3 sessions coming this week, Monday, Tuesday, and Wednesday. So from the view, and I'll bring you onto the charts with that. In fact, we'll go to the chart right now. We are looking at that SPX new moon as placing a significant and distinct top right up there. As we had our new moon back here, back in the beginning of November, and it placed a very distinct bottom. So let's get back over onto our summary, and we look over and we have CPI. CPI will be coming out next week, not this week, next week, on December 11th. And then on Friday, this is on Wednesday, on the Friday is Friday the 13th. Nothing to go jumping around about, but just letting you know it's Friday the 13th. This week, the major factor is the jobs report. Jobs report will be coming out on Friday. There will still be a couple of Fed speakers because they don't go into their quarantine until the end of this week. But pointing that out, again, we have the Fed meeting coming up here on December 17th and 18th. And that is also your OPEX week. OPEX week on SPX is on December the 20th, which essentially, that's your last trading session of the year. The last time you'll trade for the year will be December the 20th. Yes, I will be here. I will be still monitoring. I was there Christmas morning or Christmas Eve and the day after Christmas in 2018 screaming to everybody, buy, buy, buy. And everybody was on holiday because, holidays are more important. So essentially, that December 20th, OPEX will be your final trading session that you will be involved with. However, the markets are open and I will still be continuing to do what I do. So I bring you back over onto where I was talking there with Quad OPEX. Quad OPEX. What is Quad OPEX? Quad OPEX is your 4 times a year. You get your quarterly OPEX, and it involves all of the major big indexes all having their options expiration together. The monthly ones that we have during our monthly OPEX, there are random monthly OPEXs, but your quad OPEX is enormous. And the one thing I want you to see, having tracked this historically and even prior to 2020, I've got other records on this. Your quad OPEX Friday is a red close. So we are talking about December the 20th. Today is only December the 1st. So no, there is no trade to do on this now, but I'm reminding you of this so that when Thursday, December 19th is here, you know what kind of trade that you're getting into for the Friday on December 20th prior to the close on Thursday, December 19th. So that's what we got. Again, because it is the weekend, I know a lot of you guys are sitting there scrubbing Yahoo Finance and other websites about how 4 ways Scott Bessent's honeymoon as Trump's secretary could end, and these 25% tariffs on all products coming from Mexico and Canada that Trump announced on Monday, which should have been a very negative trigger on the market. It wasn't. And then he announced the 10% duties that are coming on everything from China because of all the drugs and illegal immigration. Market didn't care. Market doesn't care about news. Market cares about timing. Timing, whether you like it or not, and I'll share it with you in a couple of minutes. The full moons, the new moons, your overboughts more so are worthless compared to your oversolds. Your oversolds will constantly get bounced. Your overboughts, nothing much that you can really work off with your overboughts other than have a pretty good idea that something is starting to get a little bit slow to the upside. So again, new moon today, December the 1st, full moon coming on December the 15th. Again, remembering you got your FOMC meeting coming in there on December 17th and 18th, and you have OPEX. So both of those are going to be falling into that window of December 15th. So keep that in mind as we move forward and progress into the month. So bring you back onto the charts and kind of going to stick around with the SPX for the most part. So get off this, go back onto mine. And again, looking at this for the month of November itself. Bam, bam, nice 56.96, nothing burger. The Trump gap, the Trump fade didn't fill the gap, but we had the Trump fade. The Trump fade down 2.73%, and now heading into where we are now, which is a plus 3.27% move off of the Trump fade bottom, which came on OPEX November 15th. What are we doing? Well, what we're doing is pretty simple. As we were looking for that 6,009, we had that 60.39 that was a pivot point going into this week. Starting in early part of November that we were looking at 60.39. 60.39 accomplished there on Friday. And after you got that 60.39 accomplishment there on Friday, you got a tiny little dip into the close. Nothing to go out shouting and screaming that everything is, topped. But it pretty clearly is starting to scream top. Now, we have 60.60, which not only me, but few other people that I know also have 60.60 as the stretch it to the stretch of the stretch tops up there before we get any kind of major decline. And a major decline, I'll speak with you on that in a second. But what we are looking at here from multiple different views is all the same thing, where we are looking at this starting to get very stretched out, very in need of a move to the downside. And that downside move starts out with your prior day's lows. Your prior day's lows and your prior day's highs. So bring you back onto the SPX. So again, here, until you get a breakdown below 6,004, you got absolutely nothing to talk about. Until you get a breakdown below 59.85, you have absolutely nothing to talk about. Until you get a breakdown below 59.64, you have absolutely nothing to talk about. And then the same thing there goes with your Friday of last week, 59.45. You got nothing to talk about. Those are your warning levels for the bulls, being those down there. Closing here at 60.32, getting down to 6,003, 0.5% move. You kind of ask it quite a bit, but there again, here we are into our timing of being our full moons. Looking back onto our charts, and again, detailed view, default view, however you want to look at it, come in here with a 5-day view, and again, with the 5-day view, you got a tiny little gap over here, which is obviously your primary focus for the downside, being here down below 6,000 from Friday. Your 5-day moving averages are finally starting to move up into the 6,000s, where the 10-day moving average, which was resistance, is way down here at the week's lows, down below 59.55. That will be into this cluster zone of that 59.86, 59.60 area as we head into the open on Monday. 20-day moving average far off, but still moving up into our direction. And again, with where we have and where we have traded around, as you can see over here, your first warning level is going to be that 60-20. You get anything below 60-20, you're looking at your gap fill at 6,000. Having had only two, let me make sure I'm right, 2, 3. You've had 3 closes above 6,000. So there you go. 60-20 being your warning level, and then your gap there below 6,000. And then, as you know already, your 59.86. Your 59.86 is going to be very close to minus 1%. And from that, considering the way that you have stretched, you're very, very likely that you're going to wind up being oversold. So that is going to be as low as you're going to be able to get in the very near term without any kind of major catalyst. However, let's start looking at what our catalyst could be, because again, we're looking at this from a major wide view as to how did we get here and what are we doing. That 60-60 sticks out. 6,009 right there in front of you, 60-60, it sticks out. And while I don't disagree with it, again, it sticks out. There's a number of different ways you can come up with 60-60, and it sticks out. Looking at your Thanksgiving, so 60-44, 60-60, you got 15 points to the upside. What is your downside view? Well, your downside view is pretty limited, really, because where you're looking at for your downside is obviously that 59.86, with your primary focus being 59.71, the 38.2 retracement to where we are, and then your big 58.92, which has been untouched, and the big 58.65 down below that. So that's a long ways down, 200 points down with that 58.65, call it. But again, it is not something that is triggered other than the fact that we've pretty much done what we've done, where we've gotten very, very near that 60-60. We've come to that 60-39. We've broken the 60-27. We're above that 6,982. Anything above 6,982, I would call bullshit. But there again, it comes in with your question about how much are you willing to risk on that bullshit call. Everything to the downside is very unattainable without any kind of a break below 6,000. And 6,009 happens to be above 6,000. So 60-15, 60-10, that's where I would be looking at if I was going to be taking any kind of risk. If not, sticking with your, okay, 60-60 to the upside. But that brings you into your major problem. Your major problem is this right here, being your VIX 1339. You came down to VIX 1339. You are in the basement. You know, I'll try and avoid having that major candle. We'll try and remove it here. That didn't help out much, but yeah, you are, you know what? That's what we can do. Price, manual, 30. You're down here at 1339. You got a tiny little gap to be filled back here from way back, but we are down into the basement where the VIX is only heading lower down to the 1255 for that gap. No other gaps down below there, but you've got significantly zero volatility. And with zero volatility, zero VIX, you have no credit. There is no credit when you are going to do spreads unless you are going to get there and get very aggressive and start looking at getting $2, $3, $4. And in order to do that, you're going to have to go out there and get smaller contracts to get that bigger risk. There is no VIX. This is a tough game for trading spreads when you have no VIX. It can be done, but it is a tough game. You're much better off taking that same risk amount and looking at it from the other side of the single leg calls or puts, because there is no VIX. Pricing isn't there. So again, looking back at the email, like I said, if you lose 1542, it's game over. We lost 1542 within the first couple of hours of the week. After that dip down here to 1410, you couldn't even recover. We got that little dip here on Wednesday, I see, back to 15, and sold it on off as we went into the end of the week. And hey, there you go. There's another Friday where they crushed the VIX, supporting the VIX getting crushed on Fridays. Come over onto your QQQ, and that is your major issue, is you have nothing anymore from your QQQ. It's your weak link. And from a bigger and broader point of view, it is very much looking as if the QQQ has completed all of its super cycle and is just waiting for the new tax year of 2025 before anybody starts getting aggressive and starts taking advantage of 1 year delayed having to pay tax and starts selling just like in 2022. Same thing over here on the Russell. The Russell coming up there, bam, big top there on Monday, and then doing absolutely nothing on the IWM the rest of the week. Nothing. And you've got quite a few gaps here just from recent days, which are due, whether you like it or not, to get filled to the downside, having gone and done what it needed to do, which was go back up there to 244. You look at your Dow Jones, and your Dow Jones is the one that is just stretching penny by penny by penny, inch by inch by inch, and wider, much wider view on the Dow Jones. This thing is screaming, but there's nothing that you're going to do with that until you get that first move. And that first move on the Dow Jones is breaking below 430. Getting a 20-point move to the downside, nearly 5% move to the downside on the Dow Jones, it's going to be oversold. So there's not going to be much that you're going to be able to get from a short-term point of view. But here again, coming back onto the Dixie and that break above 107 on Friday, this is how your market bounced this week. It's because of your dollar. Your dollar and the things that Donald Trump is saying and the things that Donald Trump is promising, with your dollar getting smashed down from that 107, big warning level. And with that big warning level having been sent back to the downside, this is the reason why you got your bounce on the SPX last week, because of that right there. And you come onto your Bitcoin and you see your Bitcoin dip over here into the week, and then all of a sudden the strong talks about the dollar and no BRICS. BRICS is never going to happen. And you got your rebound up so more people can become bag holders of Bitcoin up above this 100,000 level. And again, I leave you off with the Russell 2000, and you get your big spike up here on Monday morning, your Scott Bessent, Treasury Secretary, things are going to be incredible. And then you go absolutely nowhere for the rest of the week, where that 24.54, rock solid golden, 24.60, rock solid golden, but we haven't gotten anything down here to 24.05 to fill that gap yet from last week on Friday. So on to the SPX. I finish you off with, again, some of the things where I've heard people say, this guy's smoking crack. This guy, where is he pulling this stuff out of? Well, here in white are your full moons. And I challenge you to go out, draw on your own chart. Go find out where your full moons are. Go draw a circle where every full moon is, and you will highly likely, with a 98% accuracy, find where a top or a bottom are in the current movement of where we are. Here we are on the new moons. New moons I don't love as much as full moons, but they are pretty fucking accurate, whether you like it or not. Here's your new moons looking at your major low being placed over here in August, your top right there in beginning of September, your bottom here right there in the beginning of October, dead smack bottom here in November, and where are we right now with the new moon? So, I mean, Do what you wish with what you have, but I will tell you, this is undoubtedly looking absolutely beautiful. So, where I will leave you off with showing you here that SPX 602761 is 175% above the COVID bottom. We are starting to press into red, 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 unfilled gaps, which, like it or not, all gaps get filled. Like it or not, all gaps get filled. And all of these gaps down here below 2586 are all going to be filled. They are. As you're heading into a new tax year, start doing some tax planning, because it ain't going to be like 2024. So anyway, guys, enjoy your Sunday. Enjoy everything that you got going on. Like I said, anything you need, anything you got questions on, send me an email, send me a message in the chat room, tag me in the main chat room with it if you think that other people want to ask that question, but they're too shy or too afraid to. But I'm here to help so that all of you can do what I do, and which is not only, try to make the world a better place, but turn the internet off and never go online ever again.
Never, ever quit. Never quit. And I've seen people quitting. And if they would have held out longer, they would have been successful. I've seen it so much. I've seen some of the most brilliant people in the world that never made it because they were quitters. They were just quitters. They would quit. They just couldn't take it. They couldn't, whatever. One of the things about loving what you do is that it's not work, and therefore you don't quit automatically. It's a lot easier not to quit, but you can never give up. Now, you have to also have flexibility, though. You can't necessarily say, I'm never giving up, and you got to be able to weave and bob. You don't have to go through a concrete wall when you can go over it or around it or under it or something. You have to have flexibility. You have to always be able to change course a little bit, maybe always with that same goal, but don't quit.